Hello guys, I hope everyone is doing well here. So I also hope कि सबकी trading बढ़िया चल रही है. Last 2 weeks have been pretty good. The market has been trending and my positions did quite well. I think that was just because of the trend, but also I was following some stock specific action. I wasn't really playing on index. That's what my advice for you all. Like I wanted to come in today and tell you guys that whoever whoever amongst you trade what do you say index trades in index uh, and is not doing well. I'm not really against trading index. I do a lot of bank nifty and nifty, but sometimes when you don't get trending moves in the index, you need to go towards stock. Or also while you trade index, you can have some positions in stock, and you can also trade them, just because that you usually get a clear action in stocks rather than trading index. So let me share my screen and let's discuss about the week ahead in front of us. So yeah, I always like to start with dollar index. As you can see in my charts, the dollar has been going lower and lower. Last time also we talked about in last weekly analysis, I think it was somewhere here. I think it was breaking down then. It then tried to do some sort of a fake breakdown, but it did not sustain the levels and it continues to go up. This is again a very good sign for the equity market. And also this has been going down because of the recent news that not news but expectations in the market. For example, uh, now the people expect that the interest rates have already peaked, just because of the last FOMC and the CPI data which has come out in the US. So due to the expectations now that the interest rates has been peaked, dollar index has been going down, and so does the equity markets go up. So dollar index and equity markets have an inverse correlation. If you don't know the reason, you can go check my before videos on my channel, just because I talk about it every time. Now let's see the charts of Dow Jones. Dow Jones in the last week, or yeah, has been going up continuously. It looks a bit what do you say? It has halted for a while, but I think it might eventually go up till here and give us this target. And yeah, same about the Nasdaq Composite, S&P 500. These charts really look good. You can see my charts and take down the levels. So breaking down of this high, you continue towards this level. Break off the 37, you continue to 45.90. So that's how I look at the market. But overall picture is markets are bullish. I saw this. This was a flag and pole breakout. Uh, or you can see that that's how I see it. Simply a flag and pole breakout. So, but this resistance still be a crucial resistance for us. This was a 27 July 2023 top. If we are able to go above this, then I will be purely bullish on the market. Until then, I am bullish, but I'm cautiously bullish, because if we break this level, we might see the targets of all-time high in US market as well, which will further explode moves in Nifty towards new all-time highs beyond 20,000, I guess. So 4,800 is a level to keep a watch on. Let's look at Russell 2000. So I told you guys that we can expect a target of this trend line when the Russell broke down of the what do you say, a sideways range. And I said that we might continue to go towards this support, which was this a major support of this what do you say, descending trend line, and a pretty long-term trend line. But we did not go till this level. We rather found some support here, and now we did a fake breakdown. This simply tells us that now the small caps in the US are also doing pretty comfortable, which is also helping the market to go up. Also, while we look at the small caps, we just get to know that the market breadth is doing quite comfortable now. In India, it has been good. Like I'll show you the Nifty and Nifty small caps and mid caps. But in US, the small caps were not doing well from quite a while. But I think this time that we have done a fake breakdown, we might continue to go towards the upper range of the channel. It's 1960s, and we might eventually break down. Like that's what my Elliott wave counts tell me. So I think just a second. I think that we have already completed a fifth wave type of structure here, and now we might eventually go up to this 2000. And if we break out of this channel, we will be in a long-term uptrend. Yeah, so I contemplate on a breakout. Now let's go towards Indian markets. Yeah, Nifty. So Nifty has been moving in a range. So this is a range that a parallel channel which Nifty has been moving on. We found some resistances here. Also, we broke out of this trend line. It is a ABC trend line. That's how we call it. So market usually tends to correct in a zigzag pattern. So if you tend to know about Elliott waves, you will get what is this ABC correction that I've marked. But you can still go up on Google and try to do your own research. Yeah. So we are trading in this channel. We were almost at the upper end of this channel. I think we might correct till the lower end of this channel, or at least till this line. But we might then eventually to continue up. So until and unless this resistance breaks, I won't be doing anything in the index. I want this level to break out on Nifty for me to see 20,000 levels, and then 20,200 levels, and then eventually a all-time high. So all-time high won't come next week, this month. I don't know if it will, if it not. It might take some time, but we can always have our levels in mind. So if Nifty breaks out of 19,800, 870 levels, I will see a target of 20,050. And then eventually, if this level breaks, I will see a target of 20,200. So that's how, as traders, we plan. So Nifty continues to look good, semi-bullish. It is still a buy on dip scenario. Like a lower end of a channel for buying is quite good. If you find some good price action here, you can buy at the lower end of the channel. And breaking above the resistance, I told you it's pretty high. However, looking at the bank Nifty, it's not doing quite comfortable. You can see that it was also trading in a channel like Nifty, but it has broken below. And because of bank Nifty breaking down and coming under pressure, Nifty, we see that on Nifty is also not giving a trending move on the upside. This is just because that Nifty is mostly made up of, or Nifty's major constituents are banks or financial services. It is the index is mostly made up of banks, and banks are not doing well. This is just because of the some RBI policy that came in. So to reduce the risk, financial risk in our financial system, in our economy, RBI has increased their requirement for each bank to hold as a safety. For example, before, if a bank gives a dollar or rupees 100 loan to a person, they might have to have 30% of capital to hold with them. For example, they should have 30 or 50 rupees in their bank with them, so that if something bad happens, they will stay liquidated. However, this requirement of holding the capital with them has been increased uh, by 10-20%. I don't know the exact number, but this is what has happened. And hence, this increases the cost of borrowing for banks. For example, they won't be able to lend a lot of money to the people, just because they will have to also hold some money on their books. And hence the cost of borrowing for the bank increases, and this is why the banking stocks are under pressure. So I would like to see that Nifty Bank should start again, should go up and start trading in this channel. So this will help Nifty to break out. But till the time banks are underperforming, I think Nifty won't give us that trending move. But let's see what happen next. What happens next? If you are short on banks, I would see this. I would see this gap down level, which is 43,878 as a stop loss for shorts. And if we again trade above this, I think it is not ideal to be short. But till the time we are sustaining below this levels, I think we can sell on rise on banks, and we can trade sideways on Nifty until and unless it breaks this level of 19,850. So yeah, I think that was all for today, and I will see you guys in the next video. This was my view for the week ahead. You can follow some stock specific action that you guys are the stocks you guys are watching. I think that will give a more clear direction. However, the stocks specific action that I was following, I think when Nifty or some index, so for example, if you are just a tip that I want to give you guys, or a learning before I go. So if you guys are trading, for example, Nifty IT, some stock in Nifty IT, please keep a watch on the chart of the index. So for example, CNX IT is the chart of all the IT stocks combined. So I think until and unless this chart reaches till this resistance of 33, 250 or 300, uh, the IT stocks might continue to go up, but when it reaches here, this index start, we might see some resistances. So that is the time where you can book profits. And this is just a simple advice on how to know when your trending stocks will stop to go up or might find some resistances. And yeah, that was all for today. I hope you guys liked my video. I will see you all in the next video. Thank you.